Across the country, hotels are in a slump, except in one city. In Washington, D.C., the hotel business is booming. And it's not tourists pouring into the nation's capital, it's executives. Their attendance at hearings and bailout discussions is helping boost hotel occupancy rates to 94%. D.C. has emerged as a financial center in the past year, with the U.S. government spending nearly $300 billion in aid, loans, and asset purchases. Smith Travel Research says as of June, Washington was the only one of the top 25 U.S. hotel markets to sell more rooms than a year earlier. For more on this story, let's bring in Kannan, Sankaran, Vice President at hotel research company PKF Consulting. He joins us from Washington. Welcome to Bloomberg News.
Thanks, Mark.
It's interesting. That lead-in was interesting. It seems that so many people are getting called into Washington. We need to. You're being subpoenaed, so come in, and you need a place to stay.
Correct, and we're seeing that with the bailout and with the hearings. A couple more factors are, historically with the D.C. market, with the change of administration, you get a boost in that following year, which this happens to be the year, and then you have a change in political party, you get a secondary boost. So we're benefiting from the effect of those, as well as the historic nature of this particular administration coming in with Obama. You get a third boost, which you typically don't get in the D.C. market, which helps offset some of the overall economic declines that we've seen and the decline in corporate travel.
Kannan, are office leases also benefiting from the administration?
Lease activity in the D.C. market is still, still struggling. A few years back, there was a lot of spec developments going up that haven't filled up and lived to that promise. They're getting some uptick in activity, but it's still below typical levels.
Are some of these benefits in the D.C. market going to be permanent, in your view?
Permanent to the extent that, as long as this investment by the federal government lasts in the market, we'll continue to see more executives come into this area. Hopefully, the nature of this particular business, it'll dissipate, and we won't see that particular kind of business come in D.C., and it'll be replaced by more typical corporate business to supplement the government.
Right. Some office landlords, notably Tishman Speyer, have had trouble repaying loans on buildings in D.C. amid the general economic downturn. Do you see relief in sight?
As far as the hospitality industry is concerned, we're anticipating the gap closing relative to declines year over year on a monthly basis. For instance, if you compare July of 08 to July of 09, the gap will be wider in what we're anticipating than the gap between October of this year versus October of 08. So hopefully, our declines are getting smaller, which is an indication that the hospitality market's improving, which is overall emblematic of the office market as well.
Final question, will property values in D.C. hold up better than elsewhere in the country?
We're hoping so. One of the things we haven't seen a whole lot of, or any, realistically, is any transaction activity in the hospitality market. Once transaction activity increases and we get some more sales, that's another indicator of the improved hospitality market in D.C. So we haven't quite seen that yet, but hopefully that's around the horizon.
Kannan Sankaran, Vice President at hotel research company PKF Consulting, joining us from Washington. Thanks.